In a world where Bitcoin can be $100,000, no big deal, why couldn't gold be revalued to $130,000 and thereby render our $36 trillion debt solvent, offset with the amount of gold that would more or less make that a wash?
My friend Brent Johnson has always said, if you believe in the math, then you should own gold. Own it through kinesis, own it through physical metal that you can get at Miles Franklin. Own physical metal. It is your only protection, your lifeboat in the storm.
So eventually everything will be revalued to gold. The question will be, will it be for the benefit of the people? Will it be for the benefit of the governments and the international traders, the banks that are going to run that system that make all the money off the transactions and that type of thing?
The 21st century has been marked by episodes of economic and sociopolitical upheaval. Uncertainty has pushed the precious metal to record highs as market participants seek its perceived security. Each time the gold price rises, there are calls for even higher record-breaking levels. In this video, experts like AndySchectman, CraigHemke, and RobertKientz share insights on the potential revaluation of gold, each emphasizing its growing importance in a shifting global financial system. Renowned global analyst AndySchectman explores the concept of revaluing gold to address U.S. debt, suggesting central banks and Brics nations could benefit. He cites predictions of gold reaching $27,000 to $130,000 per ounce to offset $36 trillion in debt. Meanwhile, CraigHemke also supports Andy's stance by supporting the notion that the Federal Reserve may revalue its gold holdings to address its negative net worth. He predicts that with rising financial pressures, sound money advocates like Judy Shelton could push for this change. Bank of America analysts explained that with U.S. debt expected to soar, Treasury supply faces risks. At the same time, higher interest rate payments as a share of GDP will make gold an attractive asset in the next few years. Gold revaluation isn't some nutty idea. Of course, it's what President Franklin D. Roosevelt did in 1934, immediately after the passage of the Gold Reserve Act. He revalued gold upward by nearly 70%, from $20.67 to $35 per ounce, so the government could sharply increase the money supply issued against the U.S. gold reserve in the middle of a depression. Based on current trends, founder of Gold Silver Pros RobertKientz predicts that all currencies will eventually be revalued to gold, though he warns that CBDCs may be gold-backed but still controlled by governments. He advocates for private, gold-backed digital currencies to provide a better, more decentralized solution. Now we present the clips of AndySchectman, CraigHemke, and RobertKientz's insights from their recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
The head of the Dutch National Bank has talked about this for quite some time, revaluing the price of gold. And, when you look at the amount of gold that has been accumulated throughout all of Europe and throughout the Brics nations, it would certainly benefit the central banks. It would behoove all of them. Over my shoulder, you got Roosevelt there. In essence, that's what he did when he confiscated gold in 1933. He devalued the dollar by 40%, thereby revaluing the price of gold by 40%. It's something that is being noticed when you see a senator from Wyoming actually say that she wants to float a bill to do that. It is being noticed. You got Jim Rickards saying $27,000 an ounce gold by dividing the gold supposedly held at Fort Knox by M1. You got others that say other things. In a world where Bitcoin can be $100,000, no big deal, why couldn't gold be revalued to $130,000 and thereby render our $36 trillion debt solvent, offset with the amount of gold that would more or less make that a wash? I guess it could. In theory, the Treasury says any country that wants to deliver their gold to the U.S. Treasury will pay them $130,000 an ounce. Isn't that what the price is? Yes, it's inflationary. Yes, it's going to have ramifications. But when you realize that we are entering that period of time, I think we're at 120% or so of debt to GDP. Where I come from, those countries way back when, anything over 100% debt to GDP were considered banana republics. And those were usually the countries that had questions surrounding their electoral process, their judicial system, all of the things that have plagued this country. I mean, you could argue we have been toting the banana republic line for quite some time. And in a world where interest rates are rising higher and fiscal responsibility is not, hasn't shown any signs, as Rob says, show me that you're going to cut spending and I'll believe it, that this is one option to revalue gold to a level high enough to dramatically pay down their debt. I think the BRICS nations would be more than happy.
If they're going to try to revalue Bitcoin versus gold, I think was a term used. A lot of people, I've seen a lot of folks talk about maybe the Fed needs to revalue the gold on their balance sheet. We've all seen the charts of, this massive move in rates has driven down the value, the price of all of the bonds, the CMOs and everything else that the Fed holds and has built up, over the last 15 years. And with the rising interest rates, the price of those has plummeted, leaving the Fed with kind of a negative net worth. And maybe the only asset they have is the gold that they're carrying at $40 or $42 or whatever it is.
Mm-hmm.
Right.
And so as we get deeper into this over the next 4 years, and with, let's say, sound money advocates, maybe like Judy Shelton taking a more prominent role, perhaps in Trump's ear. I wonder if that isn't on the the horizon that nobody's talking about.
Yeah, I think everything eventually, all currencies eventually get revalued to gold. So whether or not anybody wants it to, it's going to occur. Even if they try to inflate away the debt and it crashes the dollar, the gold will be the ultimate revaluation of whatever emerges out of the dollar. I think what we have to do is be careful with the options that were presented. And this is going to take some discernment by the people. And that's why education is so important. If we get the central bank digital currencies and they do it, we do have a gold-backed electronic currency, but it's also run by governments. And whenever governments run currencies, they all look at the gold standard we were on before between, was it the 40s and 70s, whenever that time frame was. We basically printed too many dollars. The Europeans called us on it. They took 2/3 of our gold reserves from 27,000 tons to about 8,000. So when have governments ever, even on a gold standard, adhered to their own rules? And when have they not, that inevitable seduction into overprinting the currency? And can it be done?
Various seasoned investors, including AndySchectman, emphasize BRICS nations' plans to create a precious metals exchange to end Western dominance in pricing. He points to excessive paper trading on COMEX and LBMA and suggests BRICS countries are quietly accumulating gold to drain Western exchanges. On the other hand, CraigHemke stresses the importance of owning physical gold, calling it a vital safeguard. He describes it as a lifeboat amidst financial uncertainty. Gold at the center of a new monetary system could enable BRICS countries to gain greater independence through reduced reliance on the US dollars and other major currencies, particularly if the new coinage becomes an accepted alternative to the existing reserve currencies. The success of the BRICS Gold Standard project could drive gold prices up and reshape the global economy. A report from Cross Border Capital calls it the most significant financial event since the 1971 abolition of the gold standard. According to RobertKientz, creating a new BRICS commodities exchange aims to challenge distorted pricing and exploitation by major banks. He advocates for free markets and transparency to ensure fair competition and economic balance. Let's get back to the interview.
Brilliant stuff.
When you mentioned the precious metals exchange that the BRICS want to build, they announced the grain exchange right around the same time. Mm-hmm. And when the gentleman who was behind the initiative of the grain exchange was talking about it, he said, look, we produce more wheat and consume more wheat than the West does, yet we have no ability to control the price. That's all controlled on COMEX. But with the establishment of the BRICS grain exchange, that will change.
Yes.
My point has been for a very long time that they know exactly what we've been doing on the LBMA and on COMEX. There's between 4 and 6 billion ounces short of silver on the LBMA. And there are reports that say that they trade 290 million ounces a day, which is basically the entire 300 million ounce float that doesn't, of the 800 million, 500 belongs to the ETF, supposedly. So they're trading the entire float every day, but they go on to say that they're only showing the final settlement numbers and that the actual trades are up to 10 times that amount. You're, in theory, trading 3.5 times annual global mine supply in silver per day, every day, and about 2.5 times global mine supply in gold per day, the majority of which these trades, and Andrew, this is your bailiwick, but the majority of these trades are naked paper contracts, which are distorting the prices. I've been saying forever that these countries, and in particular through the sovereign wealth funds, I talked to a founding member of the CME who says you have no idea how big these sovereign wealth funds are. Or like the People's Liberation Army of China, when they are importing gold or when the sovereign wealth funds are buying gold, these things aren't reported to the IMF in terms of how much gold is actually being accumulated by these countries. But what we can say is that they're bleeding down the exchanges.
My friend Brent Johnson has always said, if you believe in the math, then you should own gold. Own it through kinesis, own it through physical metal that you can get at Miles Franklin. Own physical metal. It is your only protection, your lifeboat in the storm. And again, this is a daily discussion for people, regardless of everything else that's going on in the world.
It's hard for the average everyday person to understand the gold market. The financial markets are always made complex on purpose because what it does is the money masters at top, the money changers, if you will, are the ones that always profit from that. But interestingly, if you look at the way that the banks are set up, not only are they market makers in the derivative markets, there's 4 big ones. It's in the office of the comptroller of the currency report. We know who they are. They also do a lot of the research. So they're providing research, taking positions, controlling positions. It's like they're involved in every, aspect of that. Where along the way does that give the public any confidence that any pricing that we have, and not only gold and silver, but any of the commodities, is accurate at all? And is it any wonder that the Brics are now building their own gold and silver like supermarket? Because they have, you've got the Shanghai, you've got the Indian one, you got the Russian one, you got the Dubai one, but now they just announced maybe a month ago that they're building a new Brics-based commodities exchange. Well, I wonder why. When the pricing is not there, the signals aren't there, the commie doesn't know what to do, and then you get that old Austrian economic malinvestment going on. Too much money's put in the wrong place. We use too much of this commodity and create shortages. I mean, look at Africa and look at these, even the Middle East and a lot of these resource-rich nations, which are plundered, by the powers that be around the world for their commodities.
In times of crisis, gold benefits from a fear premium, as it is perceived as a reliable store of value. This psychological driver is deeply rooted in history and culture, making gold an asset class that transcends economic trends. Moreover, analysts predict that continued rate reductions could push gold prices above the $3,000 mark by late 2025. With the potential revaluation of gold and the rise of Brics' new commodities exchange, how do you see the future of the global financial system evolving? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.